Evening. How's everybody doing this evening? I'm just getting started. Stop that nonsense. Go down here. This is James from Dividend Stock Talk. Brought to you by, hey, Wade, how you doing today? Wade, brought to you by, oh my goodness, I forget what I was talking about. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow using a safe, predictable, and consistent trading strategy created for our 9-year-old little girl back in '08. It just so happened to be so good, so wonderful, so magical, I don't know what you want to call it. But I continue doing it today. I created it back in '08 for my 9-year-old daughter. It had to be simple, it had to be safe, it had to be predictable, it had to be consistent, and no issues. So how'd that work out? Well, I average a safe, predictable, consistent 1% per week. Let's just get to, hey, Jim Bibby's here. How's it going there, Mr. Jim? Duck Sauce 101. Now there must be a story behind that name. Ought to be interesting. Let's see what happened today, because it was an interesting day, Thursday. Not a whole heck of a lot's happened on a Thursday, other than we just get up in the morning and we check our positions and see where we are. Everything looked fine today, so why the heck not? Okay, just another day in paradise. It is what it is. All right, so let's take some questions from the audience. Guys, we're just getting started, so what do you guys want to take a look at? Doing well? Way to go there, Jim Boy. Jim Boy. Anyway, all right, so Thursday, June 13th. Wow, the end of the week will be halfway through the month, which means we got 2 weeks left until the end of the halftime. What do they call it? The halftime show is going to be in a couple of days. Okay. Well, anyway, let's jump in from last night. Look at that. We didn't even take a look at Walgreens last night. So let's take a look at Walgreens today. Because remember, we were watching Walgreens and waiting to find the bottom. And something interesting happened today. Wow. All right. So let's take a gander at Walgreens. Hey, it's Botox Doc. What's happening, Doc? All right. So Walgreens has found its bottom apparently a couple of weeks ago. But let's see what the numbers look like. Because first of all, I like to jump in and I like to see where I can get started from. Well, what can I get started from? First thing in the morning, I can buy Walgreens at 15.44. Okay, great. And if I sell off the options coming up, what are we looking at? Here we go. 15.44 is what I can buy it for in the morning. The closest strike price is going to be 15.50, 29 cents, just a smidge below 2%. But here's the thing, is now a good time to buy. Walgreens should start selling coffee. That's a cool idea. All right. So, that being said, the 1550s, let's take a look at the numbers. Always, first thing. High, below, where was it? Where is it? Now look, a year ago it was at the high of the year. A couple of weeks ago was at the bottom of the year. So we know where the top of the year is a year ago, and we know where the bottom of the year is just a couple of weeks ago. Okay, so what does that tell us about the next couple of days or the next week or so? Because I just want to jump in and see if I'm going to be safe for the next 5 or 10 days. Well, where's she going to go? If I buy it on Monday, I want to be out on Friday. Great. So a year ago, the high was 32.97. The bottom was 14.58 on the 29th. 14.58 on the 29th. That was the bottom of the year. Okay, the last 90 days. Here we go. 90 days ago. You can't mistake that for anything else. Look, 90 days ago, here's the high, here's the low. Look at it, it's going in this kind of a trend. Now it's going to continue to go in a downside trend. Hey, Calibri. Hey, James, I am new, was planning to join the group and try it on Monday. Would I be able to follow? You know what, Calibri, you've been here for a couple of weeks. It really shouldn't be that difficult. Remember, it was created for a 9-year-old. Simple, safe, predictable, consistent. We're only looking for 1% per week. Now, it always comes down to the same rules. Okay? Never buy something you don't understand or you don't want to own for the long term. Do you know who Walgreens is? Do you know that they've been in business for over 100 years? This is where most of the United States gets their legal prescriptions, their legal drugs. This is this is our national. Oh, no, I was going to say national drug dealer, but kind of is, because we get all of our prescription drugs. Walgreens, CVS, Walmart. That's the big three. Okay, so if the older generation, that's my generation and older, as we're getting older, we need all our prescription drugs. Where are we going to get them? Walmart, Walgreens, CVS. I want to try doing it with E-Trade, but hope not to slow the group down. Yeah, okay. The challenge you're going to have, okay, Calibri, the challenge you're going to have with E-Trade, I don't know if they have a seasonality chart available. I don't know if they have a monthly dividend calendar to tell you when the stocks actually pay. Okay, there is that such calendar here on Thinkorswim. Okay, actually tells me when the certain stocks on my, now this is my personal list. This just tells you when the stocks on my personal list pop up. So if we are June 2024, and then we are in the 13th right here, 2 weeks. Here we go. These are the ones I want to look at this week. Next week, I want to look at these. Oh, check that out. Comcast, American Express, JP Morgan, NTAP. Well, I know NTAP is the only one. I'm not 100% sure. I've heard of growing up. But Comcast, they got 64 million subscribers every single month. Yeah, I just follow your trades until I get used to it, and then maybe switch. That's a good idea. Like I said, E-Trade doesn't have the I don't know if it has the dividend calendar, number one, and number two, I don't know if they have the seasonality chart, and I don't know. Pretty sure they don't have the the trigger trade. That one's a really cool trade. I don't know if they have that one. All right, so that's what we're looking at for Walgreens. What are the numbers looking like? And let's continue. So we got sidetracked a little bit. Okay, the 90-day high was 2208. The 90-day bottom, 1458 or 1457, somewhere in that area. But look at the last 30 days. The last 30 days are the most important. Okay, because it gives us an idea which direction she's going next. Well, here's our 30-day high. High, low, where was it? Where is it? That's the first thing I want to see. Where's the high of the time frame of the chart? The chart that we're looking at, 30 days. 30 days ago, guess where we were? Look, the 30-day high. And then she drops down, 30-day bottom. 2 weeks ago, she pulls up a little bit and channels sideways, and we've had 3 down days in a row. Well, what does that mean? Well, excuse me. Basically, all it means is that, you know, maybe she's not finished going down. Don't know. Okay, but, you know, I ask myself, do I like Walgreens? Do I want to own Walgreens? And if I do, is now a good time to buy it? Well, 3 down days in a row, even though the premiums are nice, giving me over 1%, that's always nice. But it always comes back to rule number 1. Don't buy anything you don't want to hold long term. How do you feel about Walgreens? What does it usually do this time of year? For that question, we got to come up with the seasonality chart. Okay, that's 1 year. That's 1 month after another, based on a 10 years worth of data. Okay, the blue line represents what's happened so far this year. As you can see, from January until June, okay, she's in a downward trend. Okay, what's going to happen next? Well, by checking out 10 years worth of data from this time frame right here, she should go down a little bit. By looking at this section right here. So what we're going to do is we're going to zoom into that one section and see exactly what's going to, not exactly what's going to happen, but what usually happens this time of year. Okay, so from the 13th, tomorrow's the 14th to the 21st. So for the next week, it's going to go sideways, and then the next week after that, sideways yet again. Not really going anywhere, basically. All right. That being said, that's how I like about Walgreens. I like Walgreens. Just want to be sure that this is actually the bottom of the year and it's not going to go any lower. So maybe watch a couple more days. I don't know. First one on our list today is going to be Southwest Airlines, LUV. Interesting. First thing I always want to check. Randall Ray, how you doing this evening? Nice to see you. First thing I want to check, as always, is what can I buy it for tomorrow morning? Now, tomorrow's Friday, so we'll be looking at doing covered calls for next week. Great. Tomorrow, $28.50. Okay, great. Do I like Southwest Airlines at $28.50? That's the question I need to ask myself. So $28.50 right there, 45 cents. Shit, what do I got? Is this?
You're not paying the card and
Oh no, I got a bill. I hate getting bills in the mail. I don't know what the heck's going on with that one. Let's check it out. Anyway, so where was I? Okay. So, am I getting my 1%? Well, yes I am. 45 cents a share. The stock's only $28.50. What exactly does that come to? What does it come to? For that, we need our calculator. Let's whip out our calculator and do some creative math. Okay, first off, I'm collecting for the $28.50 covered call. If I buy it at $28.50, I sell someone the rights to buy it from me at $28.50, and I collect 45 cents. Great. So what is it? 45 cents. And I divide it by the purchase price. That gives me my rate of return for the week. Purchase price, $28.50. And by $28.50 comes a grand total of 1.57%. So that's a point and a half just for 1 week. Imagine that. Remember that year? I think it was just last year. CDs were paying a point and a half for a year. And here, you can do Southwest Airlines to get a point and a half within 1 week. Okay, great. Well, what is the chart telling me? It's telling me here's the high of the year, here's the low of the year. That's where it was a year ago, and this is where it is now. 4 things I always want to look at. Juan Jefe. Is that right? Anyway, how you doing, Juan? High, low, where was it? Where is it? Where's it going next? That's my question. Where is it going next? Well, based on what the chart tells us, a year ago, she's at 32. From there, the high of the year was on the 11th of July, and that was 39.61. Okay, so for 39.61, what are we doing? Well, a couple of months later, the end of October, we have our 30-day bottom, 2203. 2203 is the bottom. So from there, she jumps up. Okay, she drops from the high down to the bottom, jumps back up again, then gaps down, goes sideways. I'm curious about this gap right here. I want to be around when that fills. Because here we are here, okay, and the gap is right in this section here. So when it does that, because that's the 1 year. Okay, so what does it look like for the last 90 days? Okay, the last 3 months. Okay, basically doesn't have anything interesting. I mean, nothing huge. Here's where it was. Here's where it is. Here's the high. Here's the low. Okay. Okay, 3 months ago, we opened up at 28.73. We bottomed out at 24.59, and that was the end of May. Topped up at 30.34 on the 10th of June. Okay, so here you go from the end of May to the 10th of June. Your high, your low. So where's it coming down? Well, it's coming back down again. All right, let's look at the last 30 days. All right, there you have it. She comes from here, and she drops out, shoots up, pulls back, and she's starting to pull back still. So it's to the downside for Southwest Airlines. So that's going to make it's not going to make the list this week. What is Tesla doing? Juan. Okay, Tesla is not one of those stocks I look at because Tesla does not share its profits with dividends. When you go to buy a stock, okay, just for the consideration of buying a stock, there's 9,526 stocks in the stock market you can pick from any single day. Okay, so why would I want to do Tesla? Okay, TSLA. Okay, here we are with Tesla, 182. What is it that I don't like about Tesla? Tesla doesn't have any dividends. Okay, the title of the group is Dividend Investing for Weekly Cash Flow, Dividend Stock Talk. That's where we buy stocks, collect the dividend or the dividend equivalents, or better yet, a covered call that gives us over 1% per week. That's what I'm looking for. Safe, predictable, consistent 1% per week. And we use, what's the best one? Juan, I couldn't tell you what the best one for you is. But for me, so far the best one this year is Macy's. Many dividend king prices going down. Okay, well, that's an interesting idea. Let's take a look at some of the dividend kings and see if she's right or he's right. Okay, somebody wants to look at AT&T. We'll take a gander at it. But Tesla, no, I don't do Tesla because Tesla doesn't share their profits. So as I was saying earlier, there's 9,526 companies to choose from on any given day, any given Sunday. Okay, any given day, there's over 9,526. Tesla doesn't make my list. Why? Well, because they don't share their profits. So you have all these companies you can pick from any day. So why are some companies sharing profits and why aren't? Well, Tesla takes all their profits, puts it back into the company for capital growth, if that's what you're looking for. I have 70,000. Which stock is going for dividends? Okay, one, it doesn't really work that way. Look at Hormel and Halliburton. HRLHAL. Okay. Yeah, those are two dividend kings, and let's take a look at them. Why not? Hormel has been in business for over 100 years. It's a hell of a lot better than Tesla. Not saying that the stock price, I'm just saying the longevity of the company. Okay, Hormel's been around for over 100 years. They've increased their dividends to their shareholders for more than 5 decades. So ask yourself, if the company is 100 years old, consistently shares its profits with its investors for more than 5 decades, that's 50 years or more, okay, why would that not be on my list? Well, it is on my list, but someone has a concern that it keeps going down. Well, that's what stocks do. Stocks go up, stocks go down. You're just trying to jump on the train at the right time and get off at the right time. Well, what do stocks do? Stocks go up, stocks go down. Stocks go up, stocks go down, stocks go up, stocks go down. Then they go up and down, up, and that's all they do. They go up, they go down. The idea is to jump in them at the right time. Now, Hormel, yes, they have increased their dividends for more than 50 consecutive years, which means more than likely they're going to have higher dividends next year. Okay, why is that important? Well, if I'm tying my money up, I want to make sure I have cash flow, because I'm at that point in my life where cash flow is important to me. I don't feel like going back to work for the man, punching that clock for 40 hours a week for the rest of my life. No, I have no desire to do that whatsoever. The problem with Hormel pays almost 0 premiums, if even 1 cent out of the money. Yeah. Secretariat, I see what you're saying. I do. I see what you're saying. So right now, it's at 30.92. Okay, the last trade, 30.65, 30.47, 30.92, 2.2 million shares traded today. Okay, so if I'm buying it at 30.92, I'm going to look at the 31s, and the 31s go for 15 cents, not quite 1%. Okay, now, there are a lot of stocks out there that are good stocks, but the premiums aren't the greatest in the world. So you got to have a combination between the two. Longevity and historical performance with the dividend payments, and how long have they been in business. Okay, this company's been in business for over 100 years, and yeah, they continuously pay out every single 90 days. Okay, and then every year it gets higher and higher and higher. That's my criteria. My criteria is higher and higher and higher dividends every single year, and weekly options, because I want weekly cash flow. I'm not at that point in my life where I can just, put the money there and say, whatever I make, I'll make. No. I have to be consistent, predictable, and it has to be safe. Okay, just for my consideration. Now, there's over 300 companies that actually meet that criteria. Okay, so out of 9,526, there's only about 300 that actually meet my criteria for a company that is worthy of my money. I know that sounds so weird. 300 companies are worthy of my money. Well, it is, after all, my money, right? My decision. It has to make sense to me. All right, so if it makes sense to me, if it continues to increase the dividend and I'm getting more than 1%, great. How does the chart look? Well, first thing I want to do, where's the high, where's the low, where was it, where is it, where is it going next? Interesting questions. Okay, by looking at the chart, we know exactly what we're looking for. Now, here's the high. Okay, well, here's the low. Where was it a year ago? Right up there. Where is it now? Down here. Where's it going next? Well, based on past performance, because what we don't what we have a tendency to forget is tomorrow is going to be basically almost the same thing as today. Okay, so look at the last couple of days, the last couple of weeks. Okay, here's your high, here's your low, here's your low here. Okay, she comes, she drops, and then she just kind of goes sideways. I hate saying sideways because stocks don't go sideways. They go up, they go down. But it's staying within this range between 30.25 and 31.50. Just staying in that tight little range. Mikey G's here. How's it going, Mikey G? Okay, so that's Hormel, and it doesn't look that great because the premiums aren't always that great. Dividend kings, especially the older ones, like Johnson & Johnson, Colgate, Palmolive, Procter & Gamble, Hormel, what was another one, Coca-Cola. The premiums are absolutely horrible. But that's okay because they have history behind them. They've been around for a long time and they're consistently profitable. So they can be a little skimpy on their premiums. But even at a 0.5% per week is still 25% per year. And who wouldn't want to get 25% per year? Okay, because that's what we're looking at. 30.92, the 31 is only bringing in 15 cents. At 15 cents is only 0.5%. 0.5% per week is still over 25% per year. And it doesn't take that long to do the actual trade. It takes less than 10 minutes a day. Oh, what's up on the list? Oh, on the list this week? Oh, here it is right here. Hormel? Okay, great. This is what Hormel is telling me. Okay, based on what I'm looking at, she should continue on the trend that they're at, hypothetically speaking. Because yesterday is basically the same as today. Which is basically the same as the day before, as the day before, as the day before. So basically, looking at the chart gives us an idea of which direction she's going next. Well, by looking at it, hypothetically speaking, she'd do the exact same thing again tomorrow. That's just based on logic. Whether it actually happens or not is a different story. Okay, because I like to have the odds and the probabilities in my favor. When do they have their dividend? Where are they right now in their cycle? What do I mean by their cycle? Well, they go up, they go down, they go up, they go down, right? So, are they at the bottom, going up, or are they at the top, coming down? Or in the middle. You're either the top, the bottom, or the middle. You're somewhere in between. There can only be one 30-day top, and there can only be one 30-day bottom. Where is the stock at this moment in relationship to the bottom and to the top? And logically, which direction should she be going next? This tells me she should be going to the upside next. But what's the numbers telling me? The numbers are telling me, here they are right here, are telling me I'm getting a 0.5%. Am I okay with a 0.5%? Please look at the seasonality for chart. Okay, so the seasonality chart. This is one of the reasons why I really like Thinkorswim, because everything I want right there. Now, I remember years ago, we didn't have the seasonality chart. Well, what is it? Well, the seasonality chart just tells us how does the stock usually react during the winter, spring, summer, and fall, and are there any periods of time that are directly related? Okay, well, this is kind of interesting. Hormel is famous for their chili, right? So when do you have chili on? You usually have chili on barbecues and whatnot. So you would expect it to be high in July and August. Well, what happens in July and August? Look, June, July, August, to the upside. That's right in the summer months where people are buying what? Cornelius, or Corny Hub, I have no idea. Sorry, it came up so fast, I didn't get to read the whole thing. Alright, so, June, July, and August. You can clearly see. Now that's 10 years worth of data. That's 2014, 2015, 2016, 17, 18, 19, so on and so forth. Jen, I've cost average so much, I'm not sure how to get out without a loss. Oh, Jen, I haven't heard from you in a while, and I'm sorry that you're in that situation. Okay, but see above. Snow doesn't follow this strategy. Would you mind looking at seasonality? I'm stuck with it. Snow. Well, let me finish up this first, Jen, then we'll go from there. Okay? So, if the blue line represents this year's movement and the red line represents 10 years worth of the average movement, and June, July, and August has a tendency to go to the upside, well, this is the perfect time to jump in and buy Hormel. Okay? Because you put that chart, right, and you put the crosshairs right there between today and the next couple of weeks, definitely going towards the upside. That's a great time to jump in. If I don't mind getting, 0.5% per week, 0.5% per week, over 25% per year. I preferably like 1% per week or 50% per year. But if you like Hormel, okay. All right, Jen, you want to look at Snow, S-N-O-W, Snowflake Inc. S-N-O-W. All right, Jen, let's take a close look at what kind of. I'm a little disappointed, Jen. I don't want to yell at you. I don't want to, scold you out or anything, but Snow doesn't have any dividends. Okay? I personally wouldn't jump into it, but considering you did, let's take a look at what's going on with Snow. Okay, first off, I want to ask myself, what am I getting? $26.95. The 27s are going for $2.25. Okay, nice premium. Why? Well, she's going to the downside, and she's going to continue to go to the downside until she finds the bottom. I know, that's why I said it doesn't follow the strategy. I don't know, Jen, if it doesn't follow the strategy, why would you get it? Okay, why would you get it if it doesn't follow the strategy? But that's perfectly fine. I took a wild chance. Okay, it happens. Let's take a look at the numbers and see what they're telling us. Okay, so if I wanted to buy it tomorrow, these numbers over here, those would work. Well, let's take a look at the chart. There's the high, here's the low, here's where it was, here's where it is. It's in downfall. Well, it's going to continue to go down until it finds its bottom. It is what it is. Okay, a year ago, 171. Okay, it topped out at 237.72, and that was back towards the middle of February. From there, the bottom, which is today, okay, now there's a possibility that Monday could have been the bottom. Look, right here. But this is the last 90 days. All right, so let's take a look at the last 30 days. Well, that wasn't 90 days, that was like 40 days. Anyway. NIO, N-I-O. Well, we'll take a look at NEO in a little bit, okay, Lonnie? Just let me finish up with a couple that I have beforehand. All right, so 30 days ago, here we are, 160. She peaks at 168, somewhere that area, and it just keeps on dropping. Now, it does look like Monday could have been the bottom, okay? That would have been nice, but apparently not so. 2 days to the upside. This is why, remember, I say I like 2 days to the upside, then jump in. Okay, so here's the bottom, 1 day, 2 days to the upside. Great, now I'm ready to jump in. What happens this morning? She gaps down a little bit. She opens up down. So that would have been a no this morning. Alright, so we have to wait again. Could today be the bottom of the 30-day period? Because you can't get any lower than the 30-day low, which it doesn't seem like it's found its bottom yet. Okay, Monday's here. Today is pretty close. What do those numbers look like? Monday's bottom was 125.89, right? And today was 125.88. So 1 penny lower than Monday's. Hakuna, how's it going over there on Instagram? All right. So that being said, that's where we are. And yeah, snow, it would not have made my list. So let's take a look at seasonality. What does it normally do this time of year? Well, this time of year, look, she has a tendency to go to the upside. Okay. I mean, that's what the chart says. Here's where we are right now. Hit a little blue dot. Cross-reference of this. Okay, going towards the upside. All right, fine. Okay, I don't know. That's no, Jen. That's not guaranteed. Okay, that's just based on history. What has it normally done this time of year? This time of year, normally she goes to the upside. Okay, great. So she goes up. Wonderful. That works for me. All right. Okay, and hopefully. Now, Jen, I'm glad you're still in the learning process. Okay, and you're keeping at it. Okay? Remember what I told you. Never buy something you don't want to own long term. I don't know why you bought Snowflake in the first place. Number 2, never sell at a loss. It's a good thing you didn't sell at a loss. Number 3, make sure it has 20 years of increased dividends, Jen. Okay? And 4, weekly options also. 5, make sure the numbers work. At this moment in time, the 127s are going for more than 1%. Great. Looks very appetizing, very attractive. However, the chart is telling me wait a little bit until it finds its bottom. But the bottom is right here somewhere. All right. But you notice one thing, Jen? This is one thing. As the stock's going down, 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 what are you collecting? Nothing. Because it doesn't offer premiums. It doesn't offer dividends. So dividends are my backup plan. Alright, so if I'm buying it 2 weeks before the dividend, and the dividend usually tells me when the stock starts to rise, because most stocks go up just before the dividend is paid. So we go here. Okay, so if the dividend is here on the 3rd, and the stock has a tendency to rise before the 3rd, it means I want to jump in before the 3rd. That's Comcast, by the way, for those you guys can't see it. Now, if you're on your phone or your iPad or something, small portable device, you're not going to see these tiny little numbers. Okay, that's why this whole screen here is live on YouTube, so you can sit on your comfy couch at home, your recliner, grab some beer, some popcorn, snacks, whatever you do when you're watching a good movie, or somebody charming on YouTube. Some random guy on YouTube. That's who I am. I'm a random guy on YouTube. You shouldn't listen to a word I say. You should do your own research. Do your own research. Is this a good company or is it not? Okay? Okay. Do the numbers work or don't they? 126 to 127, 2.25. That's a nice premium. That is probably higher than what the dividend is going to be. And if I buy it before the dividend, the stock goes up before the dividend, yeah, great. I'll get my 1%. However, this one doesn't fit the criteria because it doesn't have doesn't have what was I going to say? Doesn't have dividends. See, that's why it's called dividend stock talk, because we look to buy a stock just before they pay out their dividends. Bob's over here. Hey, Bob, over here on Instagram. Calvin Hill's falling again. All right, cool. All right, so that's snow. Jen, you don't know what you were thinking. Next on the list, DKNG. DKNG. DraftKings. Before I even look, must have been the wine. Jim, we'll take a look at Paramount. Okay, thanks, 86. DKNG has no dividends. It was going to be a no anyway, only because DraftKings hasn't been in business for 20 years, as far as I know. Okay, DKNG is a no. Next on the list, Dell. Now, Dell has been on my list before. Now, I remember a couple of weeks ago, the chart would pop up. I said, no. But look what happened. We got our high, we got our pullback, and now we have our to the upside. Great. You remember I tell you, once you get to the high, you're going to have a pullback. That's exactly what happens. Because it only have one high. Okay, it's only one high of the year and one bottom of the year. Okay, we hit the high a couple of weeks ago. Now it pulled back. People jumped out and took their profits. Well, that's smart, isn't it? If you buy it at 70, now it's at 180. Okay, that's like almost tripled in price. Almost triple. So a year ago, it was at $50. Okay, imagine a year ago, Dell, $50. Now it's 180. That's over a 300% increase. Hakuna Matata has a question. All right, give me 1 second. I'll get right to it. And Nabil, I don't know if TikTok have something about the camera flip or other thing because we see a foot numbers. Yep. That's why this is live on YouTube for you to follow around easier. Okay, question over here. Hakuna. I don't see any questions. Hakuna Matata, we have no question. There's no question there, dude. Sorry. You want me to flip the camera? I don't know why people want that. It just aggravates me. No, I'm not saying that you're aggravating me. It's just that I have 4 cameras rolling, 1, 2, 3, 4, and then I have a 5th one down here. Okay, now they're all going different directions. 1, 3, and 4 are going one direction, and camera number 2 is going the other direction. So as I'm going this way in one camera, I'm going that way in the other. And yeah, it throws me off a little bit. It doesn't do you any good, because if you're on your cell phone or you're on what do you call it, an iPad, you can't see these numbers. Okay, that's why it's live on YouTube. So you can look on big screen TV. Don't do it. ALB hitting lows. You want it to show signs of reversal, right? Foosball, how are you doing? ALB, Abelmont. ALB. All right, it's on the list. We'll take a look at it. All right. What do I think about Broadcom? Hakuna. Broadcom. You got to give me the ticker symbol, dude. Okay, because some companies I trade consistently. I know them right off the top of my head. Companies I don't know. Now I've heard of Broadcom, but they're not on my personal list. Okay, there's probably a reason why they're not on my personal list, but I don't know what the ticker symbol is for Broadcom. All right, so let's take a better look at Dell. AVGO. AVGO. All right, we'll take a look at AVGO in a little bit. All right, they're over 1,000. Yeah, sorry, Hakuna Matata. AVGO, I've just been informed that it's over $1,000 a share. I don't do anything over $250 because it's not practical for the average everyday guy, and that's what I'm looking to get. I'm looking at the average everyday guy that's getting tired of being screwed over by the man or the establishment, whatever you want to call it. It was drilled into my head, work 40 years of your life, 40 hours a week, and then retire with 40% of your money. That just doesn't work for me. The old time thinking doesn't work for me, especially when I found let's say a kink in the armor. They will have a split 10-1 on the 12th of July. Well, that's cool. How about APA, Apache? Ooh. APA. We'll take a look at Apache because Apache is on my list. All right, so where are we? Oh, we're still looking at Dell. All right, let's take a look at the numbers. 135.43. The 135 is going for $3. That's well over 1%. The 136 is well over 1%. 137, well over 1%. So all the numbers are well over 1% with Dell. I like Dell. Let me write Dell down for next week. Oh, it's already written down for next week. Imagine that. Okay, so let's see what she normally does this time of year. All right, first thing I want to notice is where's the high of the year? Where's the low of the year? What direction is it going? Well, the beginning of the year, it was going up. But look at where we are now. We reached the top. Now we're coming down. All right, so let's take a better look at that. All right, a year ago, 47.49, and that was the absolute bottom of the year. Top of the year was a couple of weeks ago, and that was 179.14. All right, the last 30 days, the last 90 days, which is the last 3 months, because I want to see what it's doing for the last 3 months. Well, basically the same thing. Look, here's the bottom, shoots on up, and then pulls back. Remember I told you, if you don't take your profit, the market maker will take away from you. Here's the high right here. Look, the market maker gapped way down. Okay, from here to here, that's a big gap down. So the market maker takes your profit. If you don't take your profit away, the market maker will take it away from you. Yes, Wade, I did circle it for next week. All right. However, now is a nice time to jump in. If we take a look at, just take a look at the chart. Here's the bottom. Here's the top. Pulls back. Right there is the pullback, and you got 2 days to the upside, and a third. Okay, so let's take a look at the last 30 days. There it is, last 30 days. Here's your 30-day bottom, your 30-day top. She gaps down and gets a new 30-day bottom right there. So what happens after a new 30-day bottom? Well, up, 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 up. 4 days to the upside. 4 days to the upside from the new 30-day bottom right there. So what do you think is happening next? Well, it's probably going to continue on that same path to the upside until it gets to the point where we, the buyers, say, all right, that's enough. Will that be more interesting for you then? It would be more interesting, however, AVGO. Simone, how are you doing? How are you doing, WBA? All right, Roger, I don't think I have WBA. Not this week anyway. Big Deck. Ever heard of MBIA or traded it? MBI. Here's the thing, okay? MBI, never heard of it. Campbell's, I don't think you ever mentioned it. We mentioned Campbell's a couple of months ago, or a couple of weeks ago, and I think it was a no. CPB. All right, so Big Deck. MBI, I've never heard of it, and usually, okay, don't take this the wrong way, usually if I've never heard of it, then it's most likely going to be a no. MBI. Yeah, no. 2 reasons. Reason number 1, it's a $5 stock. $5 stocks usually don't have a consistency of 20 years of increased dividends. But just to be on the safe side, MBI, I'm going to go over to Yahoo Finance, and I'm going to look at the historical performance for the dividends. Okay, so this company has paid 1 dividend. That's it. So when I say usually, if it's something I've never heard of, there's probably a reason why I've never heard of it. All right, I like companies that have consistency, predictability, historical performance, and quarterly dividends for more than 20 years and weekly options. Okay, this one has monthly options, which means I can only do this once a month. So if I'm collecting 1 or 2% for each covered call that I do, I can only do it 12 times. And if I only do it 12 times, well, I'm only making 12%. Why would I want to make 12% if I can find a weekly? Now, we were just talking about Campbell Soup. Okay, I've heard of Campbell Soup. I've never heard of MBI. So, I don't know, Big Deck, you suggested it. So, I don't know why you bought it, or whoever sold it to you, or why you thought that was a good idea. I'm sure you did it for a reason. Okay? Maybe you bought it back in December and got that big jump because it was, holy cow, it was in negative numbers. How do you buy a stock that's in negative numbers? Look, in December, in November, December, it was at negative 879. He was drinking wine too. Possibility. Now, there is a reason why you bought this, but I don't know why you're suggesting us to take a look at it, because we only do dividend stocks that have consistently increased every single year, consistently every year, higher and higher. Okay, this one has negative, and I've never seen negative numbers before. Well, what was it at last year? Well, last year it was negative $8.79. How can you buy something at negative $8.79? That's like the company calling you up, say, here, buy my stock. I will give you $8.79 a share. What is the bottom of the year? The bottom of the year is negative $9.97. So here the company is paying you to own the stock. That's basically what it's saying. They're paying you to own the stock. Okay, it didn't come to zero until, well, it just blew right past zero. Okay, let's zoom on this area right here. Okay, so December 7th last year, the company is paying me $8.73 to buy their shares. Not to buy it, to own it. Hakuna Matata returned. Yeah, they paid out an extraordinary dividend. Yeah, I get that. Why do you think they did that? Why would a company go into the negative numbers for people to buy their stocks? The company is paying you to buy the stock. To own it. It's not like, hey, you want to own the stock? Here, let me give you $9 to own it. Now you own it. Now you have $9. So it got to zero. It blew right by zero. Okay, so it was at negative $9 in the beginning of December. Okay, by mid-December, it's at negative $2. Okay, so if you didn't buy it at $8, well, here's another $2. Buy it now. That didn't work either. So in January, she goes to $5. The numbers definitely don't work there, dude. I'm terribly sorry. And it's a monthly, which means I can only do it once a month, which is like 12 times a year. Can you have a look at Broadcom now, since it will split 10 to 1? All right, Broadcom was it AVGO? AVGO. Broadcom. Yeah, that's definitely going to be a no. Okay, now the reason why, yeah, I got that going up. The reason why it's going to be a no is look at where it is. It's at an all-time high. Even if she does split, okay, to a 10 to 1, that's going to be $167 per share. Okay, but it's at the all-time high. It's never been this high before. Why would I buy something at an all-time high? Please review your strategy from the beginning to end. Sterling. Okay. Just sit tight because you're relatively new here. It should make sense. If it doesn't make sense, let me know. This is bothering me. This. Can you change the computer? Yes, I can, but it throws me off because this one's not the same as that one. It's not the same as that one. So I like all the cameras to be the exact same. Alright, so, yeah, I'm sorry, Hakuna. $1,700 for a share. You are a picky general. Well, think of it this way, alright? Why would I buy at the high of the year? Okay, at the high of the year, eventually people are going to take profits. Look if I bought it down here at 1,300 and now it's at 1,700, Well, that's $400 profit sitting in there. What is to keep these people here? Because there are people there who bought it from selling off and collecting their profits. I don't want to be there. It was actually throwing me off when it flipped it, yeah. I hear you. Because there are so many other companies. I like to have the odds and probabilities in my favor. If it's a good company, yeah, it's a good company. Tell me when to buy it. Buying it at the high of the year is not my idea of a good time to buy. Now, I'm not telling you guys what to do. If you like AVGO exactly where it is at this moment in time, at the high of the year, okay, where is it going to go next? Higher? Well, there's 266 trading days in a year. Only one day can be the high. So you have odds of 1 in 266 that it's going to go higher. Okay? So I don't like the odds of 1 in 266. Yeah, you guys don't forget to like, subscribe, share, all that kind of nice, neat, fun stuff. Get the numbers out, share it with more people. This is, in my humble opinion, some valuable information. Kathy, how are you today? Nice of you to join us, Miss Kathy. Julie's here. Hey, Julie, how are you tonight? You didn't say hi, but you usually do. All right, so as much as you might like AVGO, which it could be a great company, and you never know, it could continue to go higher and higher. I just don't like the odds. Okay, now remember, I'm 60, I'm retired. I don't want to have to go back to work, because if I buy it at an all-time high, where is my predictability, consistency of it going higher? Look at that, RJ30 pack just showed up. Nice of you to show up there, dude. Thank you for saying hi. Alright, so it's going to be a no for AVGO for me. Anyway, okay, if you like it, that's perfectly acceptable. Alright, next on the list is Siegey, S-I-E-G-Y. Is that right? I've never heard of them. S-I-E-G-Y. S-I-E-G-Y. Siemens. Now I've heard of Siemens. 91.95. They have no options, so that's definitely a no right off the top. Now, I like options, and the reason why I like them is because it allows me a weekly cash flow. And that's what I'm here for. Safe, predictable, consistent 1% per week. I like the weekly cash flow. Granted, it's not the greatest in the world or the highest in the world. It's 1% per week. You know, I'm sure everybody would like to get more, but I think 1% should be simple and easy. Okay, it takes less than 10 minutes a day to get it. Okay, you see, all right, make up a list. Make like Santa Claus. Make a list, check it twice, find out what stocks are naughty or nice, you know, that type of deal. So you have McDonald's, Nike, Newmont, Halliburton, Schlumberger, Mosaic, Home Depot, Goldman Sachs, General Motors, Kimberly-Clark, WBA, which is not WMB. Ooh, what the heck is WMB? Hewlett-Packard, Kohl's, Coca-Cola, Altria, Macy's. Most of these companies you've heard of. Strategy, please. Well, here's the strategy. You ready? Sterling? I buy pre-qualified dividend stocks. What do I mean by that? Any company that has increased its dividends consistently year after year after year for a minimum of 20 years. That's 2 decades. That's 20 years of increased dividends over and over and over again. And then, is your low going to get called, hoping it stays about 225? Foosball, we'll take a look at that in a little bit. But I'm explaining the strategy. Okay, the strategy, basically, a good quality dividend stock. Now, out of the 9,526 companies I can choose from on a daily basis, only 300 make my list. So what do I do with those 300? I put it into a calendar. The calendar tells me exactly when is the company paying their dividend. There's 90 days, okay? 90 days per quarter. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Each and every one of these companies here will pay a dividend every 90 days or once per quarter. So if I have 300 companies within a 90-day period, okay, logically that's over three a day. But there's only 66 trading days per quarter because there's no trading on Saturdays, Sundays, and holidays. So every 90 days, every quarter, there's only 66 trading days. Okay, those 66 trading days means there's only 13 weeks. So I have 300 companies all paying out within a 13-week time frame. 13 weeks, 300 companies, that is over 30, I think it's over 30 companies a week. Is that right? Okay, about 25 to 30 companies every single week to choose from. Okay, so I have no problem choosing. This week I only picked up one. I gotta go check out this question over here. It's a big one. Do you know what would be cool for future shows? You could bring up people for 1 minute and ask one question on TikTok. You could have a few boxes open. That would be very cool. Well, we're actually thinking about that, Hakuna. We're actually thinking about in the third quarter. In the third quarter, we'll probably bring in 2 more cameras, which will probably maybe 3. I'd like to do LinkedIn, Twitter, and then Rumble, and maybe Truth Social, because I like to go places where they don't censor my speaking. Step 2, the calendar. Well, no, step 1 is the calendar. Okay, when are they paying their dividend? That's step 1. Well, okay, step 1 could be find a good company. Hold on. Are you getting into Altria next week? Simone, we'll take a look at that. I'm gonna write it down. We'll take a gander at it. It's not written down, it's not circled, so I haven't really looked at it yet. Okay, next question. Are you getting into, okay, no. Do you think AEO has hit the bottom yet? That I don't know. We'll take a look at that one also. AEO, just to let you know, I do have AEO. I think they meant to bring a guest on your live to interact with you. Good evening, everyone. Fascinating football videos. Well, now, I have no problem whatsoever bringing on guests. However, if you want to be considered as a guest, it means, speak your mind, tell everybody how you're progressing, what you're seeing, what you like to see, those kind of things. I have no problem with that. However, I would like you to DM me with your phone number first, so that we can have a personal conversation offline, just to make sure we're not talking about Tupperware, NASCAR, or something that's not related to the topic at hand. Step 3, Sterling. Okay, step 1, number 1, choose a good company. Okay, make sure they have 20 years of increased dividends. Step 2, put it into a calendar. When are they paying their dividend? Great. After I find out when they pay their dividend, step 3, what are the numbers telling me? What am I buying it for? What am I doing a covered call for? Am I making my 1%? Well, this one's making 2%. This one right here. See the numbers, 1041. The 1050 is going for 25 cents a share. That's over 2%. Okay, great. What's the chart telling me? Well, right at the top, the high, the low, where was it? Where is it? What direction is it heading? Great. Then I want to look at the 90-day chart, and then I want to look at the 30-day chart, and then the seasonality to get an idea where she go for the next 5 to 10 days. Justine, or just in time. Oh, just in time. Cool. That's a Justine. Sorry. Just in time. You want to look at Starbuckies. Now I do own some Starbuckies in a different trading strategy. I have 6 different accounts, but I only share 2 of them with you guys. I share 2 of them publicly. The other 4 I don't share with you. I'm a nice guy, but I'm not that nice. I don't think that's probably why I'm losing a lot of audience. I'm used to having over 100 people. Oh, we have 35. Maybe they don't like the warmer weather. All right, so I think that can be too many platforms. Just do it on TikTok. They seldom censor speech. Text is more problematic. I'm happy you are open for it. Well, the idea is, Hakuna, all right, I'm setting up, like I've said it many times before, chart time frames, again, 1 year, 90 day, 30 day, and seasonality. Yeah, that's correct. Okay, so I like to do the different trading platforms, because I want to get the message out for far and wide. Now, I do get censored on TikTok all the time. Now they're talking about discontinuing TikTok. Great, if they are, I want people to know they're available on other social media platforms also. Oh, it's just Friday. Not everyone's so dedicated or focused. Oh, true, Michael. That's true. Okay, but remember, I'm starting a new company for my grandson when he gets older. He's 4 now, so I figure in 10 or 14 years, when he's ready to take over, hopefully everything will be running smoothly for him. So this is just the formative years in this company. So in the next few years, I will be opening up my own hedge fund or my own investment fund. Okay, but this is the legwork to get to that point. Okay, so this way I have video archives to show people what I was doing now as what I'm going to be doing the next 2 years. So they just go back and take a look. Oh yeah, he's doing the exact same thing. That's what he got before. Hypothetically, I should be getting the same thing in the next 2 years. Because I've been doing this thing for over 15 years. Hey, doggy, come on. Oh, thank you. So, if I'm doing the exact same thing as I was 10 or 15 years ago, and still getting the exact same numbers as I was 10 or 15 years ago, and consistently 1% every single week, well, I think when it's actually a new hedge fund or a new stock fund or portfolio fund or whatever it's going to be, because I have to cater it around what I'm told by the insurance industry who's actually going to be offering it, so that I won't be able to advertise on TV, because they restrict the kind of advertising you can do to collect clients. But if this information is 2 years old and it's been sitting in the archives or on YouTube or on Facebook, on Twitter, or all the social media sites, and it's available, people can take a look. Well, what has this guy done before? And they can actually see it, what I've done before. So future projections should equal my current projections. Okay, so if I don't change trading strategy and it stays the exact same in the future, then hypothetically speaking, I should be getting the exact same returns in the future when that pops up. Okay, so that's what I'm doing here. I'm creating. Austin's here. I'm creating. What do you look for on a chart to make a selection? All right, Sterling, come on, you're asking a lot of questions. It makes me suspicious when somebody asks such specific questions like you are. I'm looking for the high, I'm looking for the low, and then I'm looking for which direction is it going next. Okay, the 1 year chart. Where's the high? Where's the low? Where was it a year ago? Where is it now? And then where it's going next. It's really not that difficult. I'm getting late here in Hakuna Matata land. 4 in the morning. Thanks for today and good night. I'm booking my profit on Adobe tomorrow. Ciao. Ciao bella. Okay, so, Sterling, hopefully that answers your question. I look for the high, look for the low. Where was it? Where is it? What direction it's going? So right now we're looking at Paramount. I like Paramount. Been around for over 100 years. Why wouldn't I like it? It's also on Warren Buffett's list. Another good reason to jump in. Okay, so 1035 was the last trade. Okay, last trade. The bid, the ask. What can I buy it for? 1041. If I'm buying it for 1041, selling it for 1050, okay, it's 25 cents per share. That's over 2% for the week. Do I want to get 2% from Paramount for the week? Now, I do own Paramount in a separate account that I do not share with you guys. Just to let you know, I do own it. Now, this is the direction it's looking at. Okay, here we are at 1650 a year ago. She drops down to 1050, shoots back up to 1750, drops back down to 10 and a quarter, shoots back up to 14 and a half, and then drops back down again. Well, where's she going in the next couple of days? Well, the next 5 days, to be more precise. Because if I don't want to jump in on Monday, I want to have an idea where she's going to go. Look where she is. Okay, today looks like it's challenging a new bottom. Well, let's take a closer look. A year ago, we were at 1687. The bottom, she drops down to 1051. That was in late October. And then mid-December, we have our high at 1533. 54. I'm in at 13. Mikey G, you jumped in at 13 on Paramount? Okay. Alright, from there, she drops down to the bottom of, we actually have a double bottom. Check it out. On the 4th, and again, the 4th of March, and then again in April. Alright, well, let's look at the last 90 days. The last 90 days. Here we go. So the last 3 months. Here we are. She goes up, she goes down, she goes up, she goes down, up, down, and look at where we are. It's down. This is perfect for next week. As soon as she finds that bottom. Yep, I have it written down. So it's good for Monday. Nice premium parrot. Yeah, Justin, it looks nice. Okay, but I would like to see tomorrow it finding a bottom. Or tomorrow being an up day, and then Monday being an up day. Then it'll be a good day to jump in on Tuesday. Or if you want to take the chance and say, if tomorrow's an up day, great, jump in on Monday if Monday's also an up day. But we don't know until we open up tomorrow. But I like the numbers. All right, so the last 3 months, 1162 on the 10th of April. The 10th of April was at $10.12. A couple of weeks later, we have our high of the 90-day period. Remember, look at different charts. 1 year, the 90-day, we're on the 90-day right now. Okay, here's the high, here's the low, where it was, where it is. Looks like we have a double bottom. Okay? We have our high at 1454. That was the beginning of May. Now remember, we have the bottom once, the middle of April, and then again today, and today's bottom was 1023. Okay, 1023 today, and 1012. Okay, so the bottom for the 90-day period's here. This one's challenging it right here. So once it finds the bottom, where's it going next? To the upside. Great. Paramount's on my list for next week. Because here's your high, here's your low. Well, where's it going next? Well, logically, you get one high and you get one low. Once you get the low, she goes to the upside. Great, that's where we are. Last 30 days. You cannot get any prettier than that if you think about it. 30 days ago was the 30-day high. Today is the 30-day bottom. What's going to happen tomorrow? If tomorrow's an update, great. Monday an update, great. I'm jumping in on Monday. Because, here you go, down, jumps up, down again. Here's our new bottom. I like Paramount number 1. See, when did you buy Paramount? Alright, so 30-day top, she drops, back up again, now we're down here. Great, I want to jump in. I want to get 2% trying to choose that bottom, because you can't get any lower than the low of the 30-day period, or whatever period you're looking at. If I'm looking at the 90-day period, it still can only be one high and one low. You get the low, eventually where's it going to go? That's basically plain and simple. If you're at the bottom, eventually it's going to turn around and go to the upside. Alright, so that's Paramount. Now what does Paramount usually do this time of year? For that we look at seasonality. What does Paramount usually do? Okay, it's not huge. I mean, it doesn't just stand out. Adrian Z, how you doing? It doesn't stick out like a sore thumb, but it does stick out going to the upside for the next couple of weeks. Okay, see where the crosshairs are? This is today. Well, it's a tiny bit to the upside and sideways. I like it that way. No big moves up, no big moves down. Alright, next on the list, Schlumberg, SLB. That's an interesting name, Schlumberg, SLB. Schlumberger. Excuse me, Schlumberger. Interesting. Let's take the first thing we want to look at. 43.80, so I'll look at the 44, 51, that's more than 1%. That's what I'm looking for. That's how quick it is. Okay? When they pay in the dividend, what can I buy it for? What can I sell it for? What am I making? Is that more than 1%? Well, yes it is. Great. Now, what's the chart telling me? Well, here's the high, here's the low. That's where it was, this is where it is, this is the direction it's going. Look, a year ago she's here, now she's here. It's almost like going sideways. Okay, all this profit, okay, a year ago, here we are. All this profit here, all got taken away, and now we're back where we started again a year ago. Alright, so a year ago, 47.94. Topped out in a double top at 62.08, and that was back in September, second week of September. From there she drops, retraces, and drops again. Look at this last few months. The high to the downside. To find our bottom last week, and we bounced to the upside. Well, let's take a closer look at this section right here. Okay, because this is where we are. Where was she last week? Where is she going next week? Okay, on the beginning of April, 55.76. Last 30 days, basically the same thing. 30 days ago, here's our bottom, shows the upside, and today was a fluke with a pullback. I want to see what happens tomorrow. J.C. Penney was in the news about an amusement park deal this week. Yeah, we've heard that yesterday. Before I buy anything, I look at the calendar for any earnings reports, shareholders meetings, and news. Okay. Now, we did have some rumors about there being a buyout against Paramount a couple of days ago. I honestly don't know if there's any news more about that. It is what it is. Either it's more news or there wasn't. Okay, so Schlumberger. A month ago. Okay, we're at 48.77. On the 21st of May was the high, 49.13. From there, we have a double bottom on the 5th and the 6th of June. So here's your high. 3 weeks later, we're at our bottom. Now she jumps up and a little bit of a pullback. Well, what's going to happen tomorrow? Is that just a little bit of profit taking today? Because remember, she was down here at 42, and she jumped up to 45. Okay, is this profit taking today? Is that a fluke? What's going to happen tomorrow? Wave Runner. Spider doesn't have dividends. SPY. And yeah, I bought it right before the news came out. That's always a good time to buy, just before the news comes out. Somebody could accuse you of insider trading. Look it up. Cool. SPY. Well, imagine that. Spiders does have dividends. But they've only been paying since 2017, which is only 7 years. They're 118, 124, 135, 110, 144, 157. Yeah, they're not consistent with their increases. Okay, take a look at the numbers. 2022, 137, 158, 160, 178. All right, it's going up, but look, came back down again. 164, 158, came back down, 191, 160. They're not all over the place. They have a nice a nice dividend, yeah, but they've only been paying a dividend for 7 years. And they're not consistent with their increases. So you might like Spider for getting that. SPY. Yeah, and it's going to be a no for 2 reasons. Okay, reason number 1, well, it's going to be no for 3 reasons. You ready? This is why it's no for Spider. 3 reasons. Reason number 1, it's at the high of the year. Okay, reason number 2, it's $543. I personally don't go over 250, but that's me personally. Reason number 3, they only have 7 years of dividends, not increased dividends, just 7 years of dividends. So if I buy it in this quarter that gives me $1.98 a share, great. Next quarter that gives me $1.40 a share, not so great. It's going down. Look, here it is. 178, 160, 178, 151, 164, 158, 191, 160. There's no consistency there whatsoever. And I don't like no consistency, especially when it comes to my money. Because, I get that. Wave runner, I see that. 634, 635. I get that. I do. Hmm, 21. 542.99. The 543s are going for $2.39 a share. That's a 0.5%. Why would I do that? Alright, I started with less and have built it up. Cool, Jerry. Alright, hold on. Okay, look it up next week. So, figured it was a good idea to get it this week. Julie C, I have no idea which one we're talking about. Felix, is this strategy work with a $10,000 investment? Alright, Felix, basically this strategy is a safe, predictable, consistent 1% per week. At $10,000, you'll be looking at what, maybe $100 a week? That's all you'll be getting off of that. 1% of 10,000 is $100. That's it. Alright, so 50% a year, at the end of the year, hypothetically, you should have 15,000. But how quickly can that 15,000, how quickly can that 10,000 double at 50% per year? Last quarter, yep, Wave Runner got that. I started trading with less than that and have built it up. Okay, good. Can't always know, but it's worth double checking at the calendar. I've been caught too. Okay, Jen, your thoughts on Meta? Meta's going to be a no because they don't share their dividends. They don't share their profits. Your resonance. Do you demand increased dividends? If so, increase in percentage or absolute numbers? Okay, so if this year they're paying out 40 cents a share, next week I want 41, 42, 43, 44, whatever. But as long as it's consistently going up year after year after year. Empty pockets. If you sold one covered call on Para, is your expected return really 1035 for the week at 1%? Let's go back to Para for a second. Okay, right at this moment, empty pockets, you ready? At this moment, Paramount. Whoops. Let me get to Paramount. Here we go. Sorry, I'm just trying to figure this out. All right. Meta just started their dividends, but not 20 years. Okay, foosball. Until Meta gets 20 years of increased dividends, they will not be on my list. That's just the way I like it. Julie, yeah, for sure, we'll have to be more on top of it. Okay. So I don't know who asked this question about Paramount, but if I buy Paramount tomorrow morning, $10.41 per share is what I'm expecting to pay for it. $10.41. The $10.50, I can sell it for $25 per share. That is over 1%. As a matter of fact, let's pull it up. Let's clear this. 25 cents a share, and we divide it by the purchase price of $10.41. That comes to a grand total of 2.4%. If Paramount stays above $10.50 by next Friday. Well, right now it's at $10.35. Debbie Nelson, how are you doing over there on Facebook? Nice to see you. Alright, Jen, yeah, for sure we'll have to be more on top of that. Alright, Julie. James, I'm noticing a few dividend stocks at all-time highs. I believe it's a way to getting the EX state. Okay. Wave Runner, when a stock hits all-time high, great. I keep my eye on it. I wait for the pullback. Because there's always going to be a pullback. Because you can only have one high. And when you have your one high, then people start taking their profits. And they'll continue to take their profits until we, the buyers and sellers, we are the buyers and sellers. We buy and we sell. We're the investors. So as soon as it hits the bottom, and we say, wait a second, Paramount at $10.35, that's way too cheap. And then we start buying. And then when we start buying, what happens? The stock price goes up. And it starts the whole cycle all over again. It goes up, it comes down. It goes up, it comes down. You can look at any stock, any time frame, and you're always going to find the exact same thing. Okay? You'll find the exact same thing. Take a look at the chart. Okay, a year ago, she went down, she went up, down, up, down, up, down, up, down. That's all they do. Every single week. They go up, they go down. They go up, they go down. So great. Do I want to buy it at the bottom? Well, yeah, I do. But I want it to tell me where the bottom is. At this moment in time, okay, here's our 30-day high. She came down, found a bottom, and then went up. Okay, and then came down again. And then as soon as it finds its bottom, then it will turn around and go back up. I keep reminding myself the gap will fill. Well, the gap doesn't always fill, Jen. It just has a tendency to. It's not 100% accurate. It just has a tendency to fill. It's probably more in the 80 to 90% area, usually. So there was a gap here. See, it gapped up. Well, it came down and it filled the gap. But it kept on dropping. Here's the bottom. Okay, so we'll see what tomorrow brings and the day after. And Paramount is on our list for next week, because I want to see it find the bottom, turn around, go up. Alright. So that's Paramount. Okay, so next on the list, DAL. What causes a gap? That's just the market maker. Okay, the market maker gets news. Now, if you think of the market maker as a grocery store owner. 7-Eleven, Circle K, whatever grocery store you have right around the corner. Is $10 for Paramount in the money? Yes, it is. Because at the money right now is $10.41. That's at the money. In the money is anything less than that. Out of the money is anything higher than that. Right? So think of the market maker as the grocery store owner. The Circle K or 7-Eleven, whoever it is. Okay, they own that store. Okay, they buy milk, eggs, cheese, all that stuff in the store at a certain price. They then turn around and sell it to us for a little bit more. Okay, what they make as profit is the difference between what they paid for it and what they're selling it for. That's exactly what the market maker does. Okay, that's why you see a bid and the ask. So if I own it and I want to sell it, well, I can sell it for $10.38. But if I don't own it and I want to buy it, I'm going to pay $10.41. The difference between $10.38 and $10.41 is 3 cents. Well, 3 cents is not a lot, but 3 cents multiplied by 30 million shares traded today. So the market maker, see the calculator? At 3 cents multiplied by 30 million comes to a grand total of $900,000 the market maker made today. The market maker made $900,000 today. Okay? The market maker made that. The owner of the store, the one who does the buying and selling. Okay? 30 million shares at 3 cents a share, that's 900,000. Based on what? Well, it's his job to buy and sell, to make sure there's somebody always there to buy, and make sure somebody's always there to sell. Wave Runner, when is a buy gap and it fills, the stock goes higher, I would think opposite on sell. Clueless. Well, Wavefront, I'm a little clueless to that at the moment also. Okay, my opinion, okay, is gaps have a tendency to fill. Not guaranteed, but a tendency. Now, we were watching Paramount over the last few weeks because, we as a trading group, we like Paramount because the numbers just work. A couple of weeks ago, she gapped up. Well, and we all agreed that eventually that gap is going to fill. Well, it's exactly what it did 2 days later. It filled, but it kept on going down. So now we're down here. Where is it now? Well, and now it's at the 30-day bottom. Eventually, it's going to turn around and go to the upside. Does it make a good opportunity to buy it? Well, of course it does. Look at the numbers. 1041 to 1050, which is 9 cents more than what I paid for it. So I'm collecting this 25 cents, and if it goes above 1050, I collect an additional 9 cents per share. Okay, so that's good. That's more than 2% for the week. But you have to ask yourself the question. Always, question number one, never buy something you don't want to hold long term. So if you don't like Paramount and you don't want to own Paramount, then don't buy it. It is actually that simple. Alright, so that's Paramount. Next on the list, Dollar General. I forget who came up with Dollar General for a suggestion yesterday. Dollar General, DG. Okay. 125.27. See that? 125.27. So 125s are going for 154. 126 is 115. Okay, that's kind of like right at 1%. The question is, do I like Dollar General? Well, yeah, I like Dollar General. The economy is forcing, a lot of, six-figure income earners to shop at the dollar store and the Dollar General store, and, value stores rather than, name brand stores, because everybody's feeling the pinch nowadays. What am I looking at? Well, here's the high, here's the low, here's where it was, here's where it is. Well, what's going on? Okay, high here, she gaps down. Well, look, the gap filled, kept going up, and then pulled back, and we're in a downturn at the moment. What's that downturn telling me? Well, first of all, I'm making 1%. Great. A year ago, this thing's at 154.94. It tops out at 173, and that was back in August. From there, she drops and finds its bottom at 101.55. Now that was the beginning of October. Okay. Then from October, nice run up from 100 to 165. That's a 65% increase between October and March 14th. No name. What percent of your portfolio would you trade in this manner? 98% of my portfolio is invested at all times. Why? Well, I've been doing this for a very long time. I'm pretty good at what I do. Okay? I don't suggest anybody do what I do until you are proficient at it. Number one, never buy something you don't want to hold. Number two, never sell for a loss. Number three, make sure there's 20 years of increased dividends. It's absolute worst case scenario. I want to make sure I'm getting a higher return every single year, even if the stock goes down. Okay? Number four, weekly options, because I want a weekly cash flow. And number five, make sure the numbers work. What do I mean numbers? Well, the actual numbers. What am I buying it for? What am I selling it for? What am I collecting? What rate of return is that for the week? I like 1% per week. Wave Runner, James, the pharmacist I use, owns a shit ton of Walgreens. It's at the bottom, he said, 5-year on hold. Okay, now, that's the way most people invest. They buy something and they just hold it. Apparently this guy's been holding it for 5 years. Me? 5 days. That's all I want. I want Monday, Friday, collect that 1%. That gives me a 50% return per year. No name. So 98% of your investment money is buying stocks and selling options every week. Absolutely correct. If it ain't broke, don't fix it. If I'm making 1% every single week, that's over 50% per year. Why wouldn't I have all my money invested in that? Now you may think it's a little risky, but it's only risky for someone who doesn't know what they're doing. Is me doing brain surgery risky? Yeah, I have no idea how to do it. Is somebody off the street knows nothing about the stock market investing this way? Is that risky? Yeah, of course it is, because they don't know what they're doing. Holy cow, we're at 10:30. We got 1 hour left to go. Woohoo! Okay, so yeah, why wouldn't I have my money all invested at one point in time? Right, that being said, let's continue taking a look at Dollar General. Last 30 days, here we go. Last 90 days. So the last 3 months. Here's our 90-day high. Here's our 90-day bottom. Well, where do you think it's going next? Well, it's pretty evident. Okay, the 90-day high was 90 days ago. Okay, she dropped, went up, drop, went up, drop, went up, drop, went up, drop. Now we're here. We're at the 90-day bottom. You can't get any lower than the 90 bottom. Can we look at WBA if you have time? Well, we already looked at WBA. Well, we'll take a look at it again, just in case, you know. So, seasonality. Wait a minute. Let's go look at the last 30 days first. We'll take a look at the last 30 days, and then we'll take a look at seasonality. Okay, so last 30 days. We're at 140, 30 days ago. A week later, well, 4 days later, we're at the high of the 30-day period. There can only be one high, and then you have a 30-day high, and then it drops to the 30-day bottom. You can only have one 30-day bottom. Who's to say today is the 30-day bottom? We don't know. Well, we'll find out tomorrow. Okay, we got a bid at 124. I mean, the last trade was 124.12. The bid, 123.80. The ask, 125.27. Okay, it's giving us over 1% if we like it, but I don't like trying to pick the bottom, so I know. How do you know if it's the bottom? Felix, that's a great question, because at this moment in time, we don't know. Because tomorrow it could drop lower. Okay, I like 2 days to the upside. Drazik, how are you, Drazik, over here on Instagram? Okay, we don't know it's the bottom until we have a couple of days to the upside afterwards. I like 2 days to the upside. Okay, here's the 30-day bottom at this moment in time. Okay, tomorrow morning we will find out where she opened up. Is she opening up down? Is she opening up higher? We don't know until tomorrow. And if tomorrow's an up day, well, today could be the bottom. If Monday's another up day, well, then today is the bottom. Okay, I like 2 days to the upside in order to isolate a bottom. But it's like, how do you know this is the 30-day top until you have days that open up below it, and then everything else is below it? Well, it's the same way with the bottom. Here it is right here. If tomorrow's higher and the next day's higher and the next day's higher, then this actually becomes the 30-day bottom. It's not the bottom until it is. That's just, it sounds weird. We don't know that this is the bottom, because tomorrow it could be lower, or it could be higher. It's a 50-50 shot, lower or higher. But you know what? It's a 1 in 22% chance that it will be the bottom tomorrow, because there's only 22 trading days in a month. Alright, that being said, so that's Dollar General. What does Dollar General usually do this time of year? For that, we look at the seasonality chart. Now, you can't mistake that for anything else. Seriously, take a good look. The blue line represents the movement for this year. The red line is 22 years of average movement every year, every month. January 1st, December 31st, 2014, 15, 16, 17, 18, 19, so on and so forth. So the last 10 years is the average right here. So look where we are. We're right here. Look for the next 2 months. That definitely going to the upside. So we grab there, click, drag. Okay, you can't mistake that for anything else. Look at, historically speaking, she usually goes up this time of year. So, who's DG? Yeah, Dollar General. That's what we're talking about. Home surgeon. Dude, I haven't heard from you in the past week or so. Where you been? Okay, you were here for a couple of times, and then you disappeared. Alright, so, it's pretty evident to see. Okay, here's where we are today. Look at the next couple of weeks. that is definitely going to the upside. It is. It is what it is. Their net must be low from building so many stores. You know, home surgeon, I honestly don't know the answer to that question. But you know what I do know? The numbers look good. And if they continuously go up this time of year, well, I'm going to keep my eye on it in the next couple of days to see if this is the bottom. If it is, it comes a perfect contender for Monday morning. We'll just have to wait and see what tomorrow is, and then Monday. All right, next on the list is AT&T. Now, AT&T is most of the time crappy premiums. Let's take a look. 1762, the 1750s, 26 cents. I'm losing 12, which means that we'll be bringing in 14 cents. Yeah, that's below 1%. They're over 100 years old. They really don't need our business. But, you know, if we're going to have to give you something, we're going to give you about 0.75%. Okay, do I like AT&T? Well, it's currently at 1762. And that closest one right here, the 1750, is going for 26 cents. It looks like it's over 1%, but you're losing some when you buy it at that price. Sorry, it just is what it is. Okay, but ask yourself, do I like AT&T? Here's the high, here's the low, here's where it was a year ago, and here's where it is now. That is a definite upward trend if you like AT&T. Now, they're not giving you 1%. Simone, how do I calculate the 1%? Well, I calculate the 1% by looking at what my profit is. Okay, if I buy it here, I sell this one here, this is what my profit is. It says 26 cents, but if I'm buying it for 1762 and I'm selling it for 1750, I'm losing 12 cents. That 12 cents got to come from somewhere, so that comes right off of the profit. So you take the 12 cents off that 26, you end up with 14-cent profit. A 14-cent profit on a $17.50 stock is only 0.75% or less. Yeah, TikTok, they may have a good dividend, but the numbers just don't work for me. Okay, Felix, Starbucks is on the list. But it's actually, all right, see, I got a new list. All right, hold on a second. This was yesterday. That was the list from yesterday, last week. All right, here's where we are right now. Starbucks is right there at the bottom. So we'll get to it, but we're right up here at the moment. Okay, so it's coming. Next on the list is Halliburton. Halliburton. HAL. 33.77. Okay, last trade, 33.77. So I can buy it at 34. 34 is going for 38. That is over 1%. Simone, how you get the 1%? What am I making? See, 34. If I buy it at 34, okay, and I sell somebody the right for a covered call, it's the safest strategy out there, I can collect 38 cents. 38 cents is more than 1% on a $34 stock. Okay, so that does equal the 1%. How many different companies do sell calls in per year? Over 3,000, actually over 3,500. Okay, there's a lot. As a matter of fact, we haven't checked this in a couple of days, so let's do a quick check. FinViz, Financial Visualizations, the website allows you to, what do you call it? Cipher through all the different stocks that are available. Oh my goodness, they changed again. 9,538 companies. Okay, last week it was 9,526. Now we're down to 9,538, which means they've added more companies. Oh, do we buy a stock at a bottom after 2 days of going up? What is the status to get rid of it? Okay, Neil, you're new here. Okay, my suggestion, Neil, 100% honesty, sit and chill. Just relax. see if this makes sense to you, first of all the answers come, okay? Any questions you have, the answers will come to you. So I'm going to answer your question as we progress forward. Right now, we're looking at how many stocks are available in the stock market. At this moment in time, 9,538. Okay, how do we know how many of them pay dividends? Well, we're going to go right here to the dividends. Okay, who has dividends? Well, out of 9,538, there's 5,416 that have a positive dividend. 3,500 different companies that you trade per year. All right, Mikey G, you're in Halliburton at 36.73. All right, no name, that's not quite what I was talking about. Okay, when I'm talking about how many companies there are in the stock market, the FinViz right here gives you all the financial information you need of every stock there is. The exchange, the market cap, the earnings dates, the price, the volume, dividends, average volume, sector, float, all this kind of information. And then I can change the data. I can look at fundamentals. I can look at technicals. Okay, all that stuff changes everything. But what it doesn't change is how many companies are out there. Okay, so at this moment in time, 9,538. Is that correct? Yeah. 9,538 companies that have dividends. Okay, I only look at 300 because only 300 fits in my criteria. I asked how many companies you trade during a 1 year. There's about 300 companies that I look at. Okay. What is that website? All right, Felix, this is called FinViz, FINVIZ, Financial Visualizations. It allows you to depict all the different companies. Okay, so let me get out of there. Let me get out of here. Let's get back to here. Here we go. So we're at Halliburton. Okay, we're still looking at Halliburton. Here's the high, here's the low, here's the direction it's going. Right now we're at 33.77. What is 33.77 telling me? Well, I can buy it at 34. The 34 is giving me over 1%. Great. Is it a good time to buy? Well, let's check. Okay, a year ago we were at 32.61. A couple of days later, okay, towards the end of June, we have our bottom of the year at $30.13. From there, from the bottom, she shoots up, pulls back, shoots up, pulls back, shoots up, finds the high of the year. From there, she drops down again, because that's all stocks do. They go up, they go down. They go up, down, up, down. The idea is to buy it when it's at a down period. So you look, up, down, you buy it there. You get your profit taking, all right, enough profit taking, now people accumulate again, okay? Pull back, again, high, low. So, how many of these 300s do you trade during 1 year? Sorry for the repeating myself, James. I honestly couldn't tell you. All right, so I look at 300. How many of them do I buy? Well, I buy 4 or 5 every week, and sometimes they're different, and sometimes they're the same. Okay, but let's go take a look, hypothetically, at where we are at this moment in time. Okay, this is my trading so far this year. Now, I will give you a quick synopsis of what I've done so far. Okay, week 1. Ford, CVS, General Motors, Macy's. Week 2. Ford, Lowe's, Clorox, General Motors, Macy's. Week 3. Macy's, Ford, Capital One Finance, General Motors, Clorox. Week 4. Clorox, Capital One Finance, Ford, General Motors, Macy's. Week 5, Ford, General Motors, Macy's, and Target. Week 6, Key Bank, Macy's, Emerson, and 3M. Okay, Week 7, Macy's, 3M, and Key Bank. Week 8, 3M, Macy's, and Mosaic. Week 9, Macy's, 3M, and Hewlett Packard. And week 10, the exact same thing. Hewlett Packard, Macy's, 3M. Week 11, Ford, Nordstrom's, Kohl's, Albemarle, and Paramount. So you can go through all my old trades, okay, because they're all listed from the beginning of January up until last week. Okay, last week was May 28th. Right? Not this current week, but last week. Okay, last week we had Intel, Marathon, Win, Kohl's, and MPW. They're all there. Okay, you can look at all my trades. Okay, let's get back to where we were. Okay, Halliburton. Last 90 days for Halliburton. Okay, 90 days ago, 3 months ago, 36.80. Okay, she tops out at 41.56, and that was the beginning of April. From there, last week was the bottom. Okay, check it out. Last week, 6/6, which was the 6th of June. The bottom was 33.21. So look at what it's telling you. Here's my 30-day high. Here's my 30-day bottom. 3 days to the upside, up, then she pulls back. Okay, she went up and then she pulled back. Okay, so what's going to happen this week? Well, she might make a new bottom. I don't know, because the 30-day trend is to the downside. It goes to the downside until it finds its bottom, turns around, goes back up. Well, it did. It went up 5 days in a row. Now it pulled back. Is that 5 days all it's going to do? I don't know. Maybe. But all I do know, at 34, I'm getting 38 cents a share, which is more than 1%. So the question always comes down to the very same question. Rule number 1. Do I like Halliburton? Do I want to own Halliburton at $34? Am I okay with buying Halliburton at $34? Because that's what's available tomorrow. And I sell it to someone else for 34. Here's the 34 right here. Well, how long is it going to be in this area before she goes back to the upside? Okay, I like everything in my favor. I like the odds in my favor. Empty pockets. What have we circled for next week? We haven't gotten there yet. Okay, we still have about 8 more stocks to look at until we get to that point. The empty pockets, you just gotta hang, chill for a little bit. All right, so from there, let's take a look at seasonality. What does Halliburton usually do this time of year? Usually, this time of year, okay, you can't not see it. The blue line represents the movement this year. The red line represents what it normally does. What does it normally do? Well, from here, right where we are, in the middle of June, she's going to drop and then she's going to go sideways for the whole month of July. All right, I mean, that's pretty plain to see. Okay, here we are right now. Right here, she's going to drop a little bit and then just go sideways for the next month or so. So, it comes back to the exact same question. Do I like Halliburton, and do I like Halliburton at 34? Never buy something you do not want to hold long term. Okay, do you see yourself buying Halliburton and holding it for a while? Well, if they continue to give me 1% every week, hell yeah. It wouldn't be on my list if it wasn't a possibility. But that's me. I suggest you guys find your own list. What works best for you? What companies are you okay with buying and holding on to? Is Halliburton one of them? Okay, it's part of the military-industrial complex. So why isn't it on your list? Okay, if Congress does anything, well, they always give the military their money. No, Halliburton is part of that crowd. All right, so let's go back to where we were. Standard. There we go. So that's Halliburton. Next on the list is going to be NIO, because somebody wants to take a look at NIO. N-I-O. NIO has never been on my list. $4.41. How can this company possibly increase their dividends for 20 consecutive years if the stock price is only $4.41? Well, let's go over to Yahoo Finance and put in NIO. Oh, this is why Neo's always a no. They have no dividends. So when the stock comes down, what am I collecting? I'm collecting nothing. So why would I invest in them? That's basically my point. If they don't have a dividend and they're not consistently increasing their dividends, why would I want to look at it? But that's me. I look for consistency with the dividends that they pay out. I want to make sure that I'm getting higher and higher and higher returns every single week. That's what I'm looking for. Higher dividends every week. All right, that being said, Albemarle is next. ALB. Now, just to let you guys know, out of all the stocks and all the trades I've done so far this year, I've only lost money on one trade so far, and that was Albemarle. I bought it, she went down, okay? I thought that I would break it even, and apparently I sold it and I didn't break even. I lost about $600 on that one trade. Okay, but I'm still up over 1% every single week. Fart Sandwich. Oh, come on, really? That's an interesting name. I'm sure that has a story behind it. I really don't want to hear the story, because going by the name of Fart Sandwich. Okay, I find it interesting, some of the names people come up with. You're a big O fan. Okay, now I'm not quite sure if you're a big O fan of me, or you're a big fan of O Realty Company. Now, O Realty Company is a no. Always has been, always will be. They pay monthly. They have monthly options, which means I can only do it once a month. Once a month means only 12 to 15% or 12 to 20% per year. Why would I do 12 to 20% per year when I can do 50% per year on a weekly? Especially a weekly that I like. Albemarle is one of those. But let's take a look. First thing I want to see, what can I buy it for? 108.70. So 108.70, the closest strike price is going to be 109. And the 109s are going for 185. Well, that's way over 1%. But what don't I like? Well, look at this right here. The high is there. The low, it's a pretty good low, because that's a pretty good, support. Okay? So from all the way back in November, all the way down, it's support right there. You can see that line. It's not going lower than that. But look at the very last 30 days. Down to the downside. Now let's get in a little closer. Would a weekly require a large initial capital investment? Fart Sandwich? No. Because there's a whole bunch of them. No name. When the monthly get a week to expire, do you trade the monthly companies that week or stay away? I'm not 100% sure what you're talking about. Now, if you're talking about, hypothetically, if you're talking about just before the EX date, I don't want to buy the same week of the EX date. I want to buy 2 weeks before the EX date. I want to give the stock time to make a move. Now, most stocks go up before the EX date. So Comcast is on the 3rd of July. Okay, great. If it's on the 3rd of July, I want to jump in on the 17th, which is next Monday. So I want to check out what the numbers look like. Is it a good time to jump in at Comcast? It's 2 weeks. If I make my target, great. I take my money, I walk away, I say thank you very much, I'll see you again in 90 days. Because Comcast pays a dividend every 90 days, which is the first week of the quarter. Okay, so this is July, the first week of July. Comcast, American Express, JP Morgan, NTAP, and there's one more, I don't know what it is. Okay, that's the first week of the quarter. I look at Comcast the first week of every single quarter. It either makes the cut or it doesn't. And as a matter of fact, let's take a quick gander. The first week of the quarter was January of the year. Oh, look at right here. Okay, see right here, first week. CVS, General Motors, Southwest Airlines, Ford, and Comcast. First week of the quarter. Okay, I bought it at 43, sold at 44, it's got 32. Just a smidge under 1%, but hey, I like it. So let's take a look at the first week of the second quarter, which would be in April. Where is April? Oh, look at this, the first week in April. See? April 1, 2024. No, I thought it was there. Hold it. Nope, it wasn't there. Yeah, right there. Why does it say Comcast but it's not showing up? 6 positions? 1, 2, 3, 4, 5, 6. I should have it. Huh. Imagine that. There it is, right there. Comcast. March 25th, which is the last week of the first quarter. So the first week of the second quarter. Comcast right there. Okay, so I got first quarter, I got the second quarter. Now we're coming into the third quarter. Okay, what does Comcast look like? CMCSA. Okay, 37.87. The 38's go for 27 cents, not quite 1%, so it doesn't make the cut. However, look, we're in a, what is that, a 2-week downtrend? Let's take a closer look at that. Okay, last 30 days, check it out. 30 days ago, 40 bucks, drops down to 39, dumps back up to 40. Look, now we're down to a new 30-day bottom. So that thing could keep going down. Now, Comcast is on the list for next week and the week after. Okay, so this actually might look good next week. As a matter of fact, we'll write it down for next week. CMCSA. Okay, so we're looking at it for next week. CMCSA. Because it's going to find a bottom. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 down days in a row. How many down days in a row can it go before it finally says, whoa, this is the bottom. We're going back up. Okay? It's right there. Your high, your bottom, a high again. Here's the bottom. Okay, tomorrow might be the bottom. Monday might be the bottom. We don't know yet. Okay, hold on a second. 86 answering a question. Called. He can't sell a weekly the next week. Why can't I? Okay, no name. 86. Even when the monthly options expire the next week, I assumed no, because it's not. Call. He can't sell a weekly for the next week. I don't do monthlies at all, because you're talking about even when it's the monthly options expire the next week. Okay, I'm not following that question. I'm sorry. No name, yes, correct. He doesn't, because it's not in the money and he can't write a new call next week. So I'm not following that conversation. I almost feel bad about that. Neil, do you have a stock at the time they pay the dividend? Most of the time I don't. Okay, my preference, if you see this calendar right here, okay, this calendar right here, this represents all the dividend stocks that I am looking at for this month. Okay, this is what I was looking at for this week. Okay, I don't think I bought any of those this week. NLY looked good, but I like doing 2 weeks, which means these stocks here, I would buy them on this day. If I made my 1% by the 14th, which is tomorrow, okay, then I won't be buying it on this week. I give it 3 weeks, okay? So if it's here on the 28th, I'm buying it here, so I collect a premium. If I get my target, great. If I don't get my target, I write another premium here. If I get my target, great. If I don't get my target, I get another premium here, and I also collect the dividend. So that's premium, 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 dividend. You can triple or quadruple your returns just by incorporating this strategy of selling covered calls. Now, a covered call is the simplest and safest trading strategy there is, because you're buying a stock that you were already going to buy, okay? And then you're checking the numbers, okay? Are the numbers, this is what I'm going to buy it for, are the numbers giving me 1% for that week, or are they not? And that's basically all I'm looking for. I'm looking for a good quality company. Once I find the good quality company, well, here they are, right here. Okay, McDonald's, Nikes, Newmont, Halliburton, Schlumberg, Mosaic, Home Depot, Goldman Sachs, Coca-Cola, Macy's, Altria, Kohl's, Hewlett-Packard, Occidental Petroleum. Most of these companies you've heard of. Okay, those are the only ones that I do. I don't do companies that you've never heard of. It's like, what do they do? Number one, never buy something you don't understand or you do not want to own. If you don't understand it and you don't know what they do, why would you put your money into it? Piero, yo, what's up, my brother? I have no idea what that means, but okay. A DG302. Ooh, DKG302. I had a 302 in my Ford F100. Ooh, I like that motor. Okay, evening, James. Para hurt this week, but at least I got my 2% on the premium. So the question, DKG, always comes down to is, do you like the company? Does it make sense to you? Are you okay with owning it at that price? You got your 2%? Great, awesome. That's what we're here for. Safe, predictable, consistent returns per week. I look for 1% per week. You got 2. Great. Next week you might not get 2. Next week you might get 1. Next week you might get 0.5%. But as long as you're getting a consistent 1% on average, if you take a look at my list, okay, 1.2, 0.9, 3.9, 4.6, 2.3, 2.03, 1.9, 1.06, 1.03. It averages out to over 1% per week. That's my goal. Consistent, predictable 1% per week. Seems my question didn't show up. So look at Instagram. How come you traded Marathon? I didn't think you liked crypto. Marathon is a Bitcoin mining company. I forget exactly why. Every once in a while, somebody will mention something. We'll pull up the numbers. Okay, we'll pull up the numbers. We'll pull up the chart. We'll pull up the numbers. We'll pull up the charts, and the charts will tell us what's happening. Every once in a while, that little green monster on my shoulder wins. Okay, you're right. I probably shouldn't have traded Mara, M-A-R-A, but I did. The numbers look good. Okay, we also did NYBC. Okay, New York Community Bank, NYCB. We probably shouldn't have. Okay, MPW. We probably shouldn't have traded that one either. But both of those stocks were below $5, and the numbers looked good, and we had extra money. Like, what else are we going to do with it? Just let it sit there? No, so we threw it at something. Okay? So, right. Next on the list, Apache. I hope that answered that question for you. Marathon Oil. Yeah, Marathon is a crypto mining company, but Marathon Oil is a different company. So it depends on which Mara we're talking about. Oh, Altria. Alright. Altria is like 3 more. Okay, Altria will be the last one we do for the night. Okay, Simone? I promise you. Because I'm pretty sure next on the list, MBI is more than likely going to be a no. Why? Because I've never heard of it. Yeah, we already looked at this. It's a no. Okay, if it doesn't have 20 years of increased dividends and it doesn't have weekly options, it's a no. This one has monthly options and it's only $5. No. Okay, Campbell Soup. I'm going to do Campbell Soup and then Altria, and then that's it for the night. That's if you have a stock during the payment of the dividend you collect, otherwise you didn't. Okay, Neil, when I buy a stock, okay, when I buy a stock, today is the 13th, 14th, and then Monday, I look 2 weeks out. So Monday up for consideration, Comcast, American Express, JP Morgan, NTAP, and a few others. Good quality companies. I look at each one of those. They're paying out the dividend here. If the numbers tell me yes, and the charts tell me yes, then I'll be buying it 2 weeks before the dividend. I will give it 2 weeks for it to go up 1%. Once it goes up that 1%, I'm out. Thank you very much. Have a nice day. Goodbye. All right, your residents. Are you streaming on Facebook also? If so, how do we find you? I see the group, but not the stream. Funny thing is, I have 5 accounts on Facebook. It's on one of them. I don't know exactly which one. Because, like I said, I got like, I got 5 cameras going, which means I have 5 different streams going. 2 on YouTube, 1 on TikTok, 1 on Facebook, 1 on Instagram. I don't know why I do Facebook. I don't get hardly anybody watching on Facebook. Okay, you got that? Okay, so where were we? Yeah, Campbell Soup, and then Altria, then we're going to call it a night. CPB. 44.20. 44.20. The 44 is going for 20 cents. That's going to be a no right off the top. Sorry, Jen. I know Jen's the one who suggested this one. So, sell any secured puts to lower your entry on a potential stock you would want to buy? That's a great question. The answer is no. Now, why is the answer no? Now, don't get me wrong. Cash secured puts, basically the exact same as a covered call. What do I mean? The fundamentals are the exact same. You're taking a chunk of change, so you're taking some money, you're putting it aside, you're putting it up as collateral, you're collecting a return on it. That's exactly what covered calls are. You are taking a chunk of change, putting it up as collateral, and you're getting a return on it. The exact same thing. The reason why I don't do puts are obligatory. Okay, that means you're forcing someone to do something. You're looking for the stock to go down. Okay, I don't like negative stuff in my life. Don't ask me. It's a philosophy thing of mine. I like everything to be on the positive side. I like watching movies with happy endings. Okay, I don't do death, destruction type movies. I like everything in my mind positive to go to the top side. Lonnie, thank you for a good show. We got one more stock to go, and that's going to be it. And that's going to be Altria. Okay, MO, Altria, in case you didn't know. MO, okay, MO, which is Altria, is a dividend king, which means they've been in business for over 100 years. They've increased their dividends to their shareholders. That is you and me. When we buy and we sell stocks, we are shareholders, we are investors. We are the ones that create this picture. Okay? You can say whatever you want, high, low, high, low. We are buying, we are selling. We are creating this mess. The market maker, he's the one who decides these numbers. The bid, the ask. We create the volume. And we create how high it goes, and we create how low it goes for the day. That's what we are in control of. Okay? We created this mess. Here's the high of the year. Here's the low of the year. The low of the year is the end of October. The high of the year was in the beginning. It looks like the beginning of June. Well, where's it going next? More than likely, it's going to go down. All right? So here's your high, 4 days to the downside. I'm terribly sorry, hon, but I'm going to just sit and watch it until it finds a new bottom, probably somewhere around 44 or 45, before she bounces, turns around, goes back up again. Because that's what they do. Here's your bottom. She goes up, pulls back, goes up, pulls back. What do you think is going to happen next? As soon as it finds its bottom, as soon as profit taking is done and over with, because here's your high. What happens at a high? If you don't take your profits, the market maker will take it away from you. Alrighty. Show of Praise official backup. Well, hello and welcome to the show. Victoria, how do you look at it decide if you're going to buy? Well, Victoria, that's a very simple question. Okay? I'm going to explain it in a second. Get a link to Linktree in your bio so you can have links to all your channels. Believe it or not, I did set up Linktree. I have an account with Linktree and I filled it all in. I just don't know how to take it from where Linktree is to put it to my social media sites. I don't have any clue how to do that. Okay? So, who asked the question? Victoria. There's a certain method or a certain recipe I use. Rule number one. Well, step number one is choose a decent stock. Well, how do I choose? Well, you have the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, Warren Buffett's list, and any other decent stock you can come up with that has 20 years or more of increased dividends. Why are those the only ones I look at? Well, reason number one is they're over 300. That is more than enough to look at. Okay, I cannot look at all the companies that are out there. There's 9,537. We checked this evening. We checked a little while ago. How many companies can we invest in? The number keeps going up higher and higher and higher. Okay, as of this morning, there was 9,537 different companies to choose from in the stock market. I only like those that have 20 years of increased dividends or more and weekly options. Those two criteria bring that list from 9,500 down to 300. I can barely copy and paste. You shouldn't feel bad. Well, Wade, I am trying, really. It took me weeks to figure out how to go live on other channels. Okay, I still have two perfectly good iPhones. Well, this is an Android, this is an iPhone. But I'm having a challenge getting approved for doing live on X, live on Truth Social, live on Rumble, and live on LinkedIn. Okay, I already have the phones. I'll just dial and put in, go to my website or go to the social media site and say, all right, I'm ready to do live. It's easy on these three. It's the other ones that are going to be more complicated. Where can I learn more about how to do this? All right, Victoria, my suggestion is just keep coming back every night. Okay, I've made the commitment to be here for a whole year. Okay, so I've been here since January. I've only missed 2 days. I'm on every night at 9 o'clock, right around 9. You need someone who can help you with all your channels. Yes, I do. To drive more traffic and to your shows. Yep, I need all that stuff. You're absolutely right, your residents. I do need all that stuff. I'm totally clueless. Okay, now I started this venture with my daughter back 15, 16 years ago. She bailed because it wasn't very profitable for her at the moment, which means she wasn't getting paid for doing it. Okay, so I've been doing it for 15 years without getting paid. Only recently have I started making money. It took me 15 years before I started making money doing this. That's crazy. But I keep doing it. Why? Well, because it's my money and I want to invest it properly. But that's me. Okay? Most of you people will come here and you'll say, okay, yeah, fine. But then you're going to get tired of it because it's the same thing over and over and over again. I look at the exact same stocks. I look at Comcast every 90 days. Most people just buy Comcast and just leave it alone for the year. Okay, great. Well, that's why they get, 5 to 7% per year and I get over 50% per year. Because I do it every, 15, 20 minutes every single day. Talk to Hakuna Matata. How come you traded Marathon? I didn't think you liked crypto. I don't like crypto. Okay, Marathon is Marathon Oil. Okay? So, Altria is something we're going to keep our eye on. Okay? Now, I like Altria. They have 50 years of increased dividends. They are a dividend king. To me, Altria is a no-brainer. It's just, is it the right time? And the stock chart is telling me it's not the right time. Okay, here's the high, 4 days to the downside. Yep, it's going to come down a little bit more before she turns around and goes back up again. That's when I want to jump in. No, I meant for helping you with your channels. Well, great. Send me a DM. I'll give you a call. We'll chat and we'll go from there. Because, yeah, I could use help because I don't know how to do it. I know how to stand in front of a camera and push the button and go live. That much I know. Marketing, no clue. Sorry, it's just not my thing. All right, that being said, we are at 11:30. Let's take a quick look at AEO and Starbucks and call it a night. What city are you in Florida? Oh, I'm in Sarasota. But this weekend, I'm heading on over to Okeechobee, hang out with Botalk Doc. Because me and him are going to do a little joint venture and see if we can come up with some way to make things a little easier. Okay, AEO. Now, just to let you know, I do have some AEO, American Eagle Outfitters. Okay, whoops. 21.24. 21 is going for 34 cents. If I buy it at 21.24, I'm only making 10 cents. Nope, that doesn't work. 21 and a half. Nope, that don't work either. Sorry, AEO doesn't work. Now, I already own it. So that means, who knows what the hell I'm going to do? Well, we'll just take it one day at a time. You didn't flood away. Sorry, nope, didn't flood away. Okay? Now, I am in the middle of buying a motorhome because I want to travel around the country. And we were out working on it today, and I'm walking around it in my flip-flops because I can't wear my shoes because I'm walking in 6 inches of water. And it's like, I can't do the work because I'm walking in puddles. Anyway, so let's take a look at American Eagle Outfitters. Here's our bottom right here at like $11. She shoots on up to 26. That's over 100% return from a year ago. Okay, a year ago we're at 11, then we jump up to 26. Well, now we're down to 20, less than 21. Okay, it's not the greatest time to own it, but I already do own it. I own it at $25.97. Okay, at 26. I own it up here. Okay, I don't remember why I jumped in and bought it, but I did. Had it been a reason. But now she's at $20.89. All right, so that's going to be a no. Starbucks is the last one. SBUX. Now, just to let you know, I do own Starbucks, and you'll find out very interesting where I own Starbucks. And we've been talking about Starbucks for the past month. And you're going to see some of the numbers. First thing I want to show you, okay, first thing is, if I buy it at $80.16, the 80 is going for 121, which is over 1%. The 81, not quite over 1%. So this is your best bet at the 80. In the 80, it's already in the money, so the stock doesn't have to do absolutely anything. But let's take a look at the chart. Look. Here's your high of the year. Here's your low of the year. Look at this big, huge gap. We're going to take a look at this in a little bit because there's a funny story that goes along with it. Okay? So, a year ago, 97.50. Topped out at 107.50, and that was in November. Bottomed out in May, and that was around 72. Cool. Well, there's our numbers. Okay, the last 90 days, right there. Okay, here's the last 90 days, the last 3 months. Here's where we were 90 days ago. That was a high, 92. It comes over to here, the end of April, at 88. All right, take a close look at this, right? Here's your high, here's your bottom. She goes up, I jump in right there at 88. What happens a couple days later? She drops like a rock down to 72. Okay, I'm into it at 88. She drops down because she missed earnings or whatever it was. Big, huge drop. But this gap is going to fill. Now, we were talking about that back in April. Well, that gap will fill eventually. Well, look at it. To the upside. She got to 80, almost 84. Where's the bottom? 84 and a half. Well, we're pretty much getting closer to it. Okay, but I bought it at 88. She jumped down here. She kept on dropping. Then she starts going back up. I like 2 days to the upside. So here's your bottom here. Let's close into that a little bit tighter. Okay, there's the big gap down. Here's the bottom, right there. 2 days to the upside, I jump into right there at 76. So I now have some at 88, and I have some at 76. So my dollar cost average is right around 84. Alrighty. For the last 30 days, this is what we're looking at. 30 days ago, here's our bottom. Shoots on up, here's our 30-day top. Pull back right here. What's going to happen? If we have another update tomorrow, that's a good opportunity to jump in because the numbers are telling us we're going to get our 1%. And we're talking about Starbucks. Okay? We're talking about Starbucks. We Americans, we like our coffee. We're not giving up on our coffee. Right? So, that being said, I have my Starbucks and I'll hold on to it for a while because it's in a different trading strategy on a different platform. It's not this strategy right here. Hey, Michael, have you been selling covered calls on Starbucks below your cost basis since the gap? Monitoring it closely. Yeah, I am monitoring it closely. However, I just said I have 2 positions in Starbucks in a different trading strategy, in a different trading platform. Okay? Now, I have 6 trading accounts, 6 of them. I share 2 of them with you guys. And I share them right here. Okay? Right there. I show you what. Okay, I'm a nice guy, but I have to draw the line somewhere. This trading strategy here averages out at 50% per year. The other trading strategy, where I have my Starbucks, averages out between 100 to 200% per year. Total different strategy. And no, I do not share that here. That is a paid group. Okay? This here, this is free information. This is 50% per year, if you like that idea. When are you going to fill in the missing weeks? What missing weeks are we talking about there, Mikey G? Because the only missing weeks I'm missing is week 21, which is this week. Options don't expire until Saturday, which means I'll get the final numbers on Sunday. 21 to 23. You're right, because this trade here was the 28th. Okay, bought it on the 28th, it expired on the 31st. So yeah, I'm missing the first week of June, so I need to update that. I'll do that tomorrow. But this week, this current week that we're in now, that won't get updated until Monday or Tuesday. It's always a week behind, because the options don't expire until Saturday, which means on Sunday I'll get to my final numbers. Need experience at below CB. Need experience at below CB. I have 4,000 of SoFi 1126, where it's at 680 today. That and it would give 1%, but of course no dividend. Yeah, so don't get me wrong, you know, CB, I wouldn't be doing that at all. Look where it is. Okay. Now Chubb used to be a dividend king. They did increase their dividends for over 5 decades, and then someone said, you know what, let's cut our dividends. They got booted off the dividend kings list, and now they're slowly trying to work their way back up there. It's going to take a long time to get there. So Chubb is on my list. It's just not as huge, as high as some of the other ones. And Chubb is a monthly. Okay, so number 1, Chubb has no dividends. Number 2, Chubb is a monthly, so the numbers just don't work for me. Number 3, it's over 250 bucks. All right, so look where we are. 30-day high here. You got a gap here. This baby's going to fill. Look where we are. She's high. She's coming down. Yeah, sorry, Chubb is just all over the place. No-ness. It's no-ness everywhere. Old trade. Yeah. All right, so that takes us to 11:33. Now tomorrow is Friday. For those of you that are on in the morning trading group, we don't jump on until 3 o'clock tomorrow. Why? Well, because we done all our trading on Monday and Tuesday. Friday, everything expires on Saturday, but there's nothing you can do after 4 o'clock. So that's what we take a look at. Sounds fun. Going to Okeechobee. Yeah, well, Mikey G. Doc Botox is over there, and we've been chatting for a while, so he has a couple of interesting things. Makes it worth my while throwing on over there. That's a 3-hour drive. So it's got to be something good for me to drive all the way over there. So you guys wait till you see what we have cooked up. You're going to like it. All that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week. That's my goal, and that's, I do a lot of different things, but I like to stay consistent with my trading. Good quality dividend stocks, weekly options, 20 years or more of increased dividends. There's only 300 companies that meet that criteria. Those are the only ones I want to take a look at. That being said, you guys have a nice day, and we'll see you again tomorrow night. Julie C., I didn't hear from you all night. That's off. That's off. And that's off. Okay, so this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Maverick, my little buddy, you have yourself a great day, and tomorrow maybe we'll go swimming in the pool, have some peanut butter jelly, and then have some popsicles. Yummy, yummy, yummy. All right, catch you guys.